All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. I'm jumping on here about 10 minutes early just because of the market open and what's going on here. We'll get to the challenge here in 10 minutes. But, if you hadn't looked at the market this morning, and looked at any of the news, read anything about it, seen any of the TV, looked at any of the tickers, right? And I were to jump on and to say, hey, you know what? Apple, it's green. Look at Apple. It's green today. I mean, Apple green, that's it doesn't happen very often. FedEx is green. FedEx up $1.24. I mean, imagine the market rally that has to happen to get FedEx to go green. Caterpillar's green. I mean, up 0.2%. Micron. I mean, this thing has been bear, all aboard, bear, everything. Micron's green today. What would you think? You think, man, the market must be up a lot. I mean, to drag these gutter stocks higher, the market better be, probably has to be up pretty good. But then we go and we look at, we look at the market, right? And we look at kind of where it opened up. And here's the minute chart. And you can see yesterday's sliding close. And, overnight, futures continued on lower. And, we're lower here. Now, we've seen futures start to bounce in the last few minutes. But what's really interesting about the bounce is some of these stocks like the FedExes, the Teslas, the Apples, they're the ones leading this bounce. These have been the stocks, these have been the ones that, have just been absolutely riddled here, and they are leading the charge. You don't see it very often. It happens very rarely. But there is a huge implication with it. What's going on? What's happening? Think about this. The short sellers, right? The short sellers, those are the stocks they've been in. Those are the stocks the short side has been playing here to the downside. They haven't been playing Nike. They haven't been playing, Facebook to the downside. They haven't been playing, things like Adobe to the downside, the real high quality, the Microsofts of the world. Those aren't where the short sellers have been. They have been in the Apples. They have been in the UPSs and the FedExes. They've been in the Microns of the world. That's where the shorts have been. The shorts are coming out on this gap down. The shorts are absolutely coming out on this gap down. What's that tell you? That tells you, wait a minute, the shorts, and we hear a lot about short squeezes and things like that in the market, but when you look at who's smarter in the market, the longs or the shorts are infinitely smarter. The shorts are right way more often than the longs. The shorts, when they're wrong, it's very visible, and they get clobbered. But to be a fund and be a big short seller, you have to do a different level of homework, right? They're not just these big funds that are just, I got to allocate some into industrials and some into transport and some into financials, and, we'll just hope and pray the market goes up in the long run. The shorts aren't in that position, right? The shorts are much more what's going on, what's happening right now. And we see the areas where the shorts have been involved, we see those areas actually green this morning as the shorts are jumping out of them. They didn't open green. They didn't start green. They didn't gap up. They all gapped down. In fact, some of them were the laggards here this morning. You take a look at something, you take a look at Apple this morning, right? Where Apple was. You see it gapped on down. I mean, this is a pretty $2 gap down here on Apple. Well, you didn't see that on Pepsi. Pepsi didn't gap down. In fact, Pepsi opened up, was a little bit higher right away. It since has been sold. We see that most of these stocks, these kind of, gutter stocks isn't the right word, but I'm going to call them that. These gutter stocks, they have gapped down and been bought up here this morning. And that is a very clear sign that the short sellers are coming out. The short sellers are saying, okay, you know what? It's time to start, going to the sidelines with some of the stuff that is going on out there. You go and you look at the headlines, you turn on the TV, you listen to the analysts. It kind of looks like things are getting a lot worse, right? But when we see the price action out there, when we see what the pricing is telling us, it's a story of, hey, you know what? There's potentially a very big bottom here in the market. Not just a 1-day bottom or a 2-day bottom, but a significant bottom of a level where the market is not going to see for another while. Now, will that be the case ultimately? It may not. The shorts aren't always right, but we are seeing that here this morning, and you'll notice it's coming off the S&P, off of that 200-day moving average. So that's kind of where that price action is happening. Okay, so one strange open. Not that it's strange in terms of what's the implication and who knows and all of that. We don't see this very often. In fact, this is pretty darn rare to see, and it's pretty heavy here this morning. We have Western Digital's green. The FXI, the Chinese ETF, opened up green here this morning. You have Wynn Resorts, right, which was gap down, now trading green. You have these stocks that have just been hammered, pushing up into the green, even though the market is still down quite a bit, even though some of the better stocks out there, like the Microsofts of the world, they're down pretty big and moving lower. Another very interesting thing about the market this morning is it's not as ugly as what the indexes suggest. If we look at the sector breakdown, you can see where is the ugly? Well, it's down here in energy, right? Oil down big, it's going to be down. And then it's healthcare, right? And healthcare is a big weight, right? And so it's going to make the indexes look a little bit worse than what they are. What's dragging on healthcare? Well, Johnson & Johnson, which has gone, has just gone absolute free fall mode here as the opiate trial in Oklahoma, continues and kind of wreaks havoc on J&J stock and how it's trading. It's been quite a 2-day move here in J&J, and pretty much since the upgrade yesterday morning. Goldman Sachs upgraded J&J yesterday morning, and when you go and you start to run studies looking at analyst upgrades and downgrades and, do they really move stocks, right? Everyone thinks, well, there's the upgrade. Okay, obviously the stock's got to go up. No. In fact, most of the data shows that the analysts, outside of that initial day have very little influence on the direction of a stock. And, J&J is one of those situations here where, where when you look at the data, the analyst, they influencing it. On that first hour of yesterday morning, sure. But after that, no, not at all. All right, so that's that's what we're seeing here at the open. Now there are no new signals here for the challenge, but there are some things that are getting close. In fact, I thought for a moment we might see a Facebook signal. Facebook actually went green here this morning. This is a stock held up very well yesterday, holding up very well today. You can see we almost have a 3-7 crossover, but it's not quite there. It's about 20 cents off here with Facebook. So to get the 3 over the 7, we need about an 80-cent rally in the stock, to happen for a bullish signal to come in here on Facebook. That's the closest to a bullish signal, but if you take a look at something like Netflix has a downside 3-7 action going on here on it, but it's not signaling here just yet. It could by the end of the day, but where it sits right now, it is not. We have downside action on things like Coca-Cola, where the 3-7 is crossing on down, but this is not a new trend marker. This is just kind of the stock being in a chop mode. Visa, same thing. We had a 3-7 crossover to the upside, didn't trigger bullish. Now we have a 3-7 downside crossover. It's not triggering bearish. It's just a product of the consolidation of the stock. We have Boeing. Which 3-7 crossover on Friday, now a 3-7 crossover to the downside. This one is one that by the end of the day could be a downside trigger. Does have that potential, unlike a Coca-Cola, which just doesn't have that potential. But Boeing, if it's able to close closer to its lows than its highs, would likely trigger here on the algorithm, and signal give a downside signal here or this afternoon. Arconic has a 3-7 crossover, but this is nowhere even close to any sort of downside signal. You can see the Stowe 39.1 trading up here above 80. Home Depot. And this is one where we are seeing a 3-7 crossover to the downside. Big reversal yesterday. Big reversal yesterday for Home Depot. Johnson & Johnson-like reversal here for the stock, but is close to a bearish trigger. In fact, if it were to close around this level, I suspect it would be a bearish trigger. But it's not one here right away this morning. So we have some that are close. The Boeings of the world. Home Depot, Netflix on the downside, and we have Facebook very close here on the upside, but close doesn't cut it when it comes to it, so not jumping into to any of those here this morning. So anyway, that's where some of them are. I was asked yesterday about Bank of America and why Bank of America never triggered for the challenge, and I promised I would show it. It's pretty simple. You can see the downside 3-7 crossover here on Bank of America early May. And you'll notice it came from a new high, a new short-term high. So very rarely will a stock go from a new short-term high, get a 3-7 crossover, and it trigger bearish on the algorithm. It doesn't mean the stock can't go down. It's just the probabilities are not as good, right? We see plenty where the stock goes to a new high, downside 3-7 crossover, and there's a strong sell, right? That does happen. It's not like the stock's immune to, a drop from a new high. But the odds are not nearly as good, okay? And the algorithm is tuned to play the odds. And you'll notice that since this 3-7 crossover, the 3-day moving average has been below the 7-day moving average ever since. There hasn't been another type of crossover, another trigger, to come in here to the stock. Even though we had a little bit of flat and rally, we just haven't had a new trigger come into it. And it's in a position now where if it has a 3-7 upside crossover, it's probably not going to trigger bullish. Why? Because of the magnitude of this sell-off and the velocity of this sell-off. Now, it could have a trigger. I can't say it won't because, if it does, rally from this point, it is a higher low. So, it could. It's not out of the possibility there. But that's why we're not seeing a trigger on that come into play. And those 3-7s, they're very important when it comes to the, to the triggers here for the challenge trades, and but again, it's a very specific look. It's looking for something very specific that has happened many times in the past, where it puts the odds in the favor. It's not looking and going, well, there's no 3-7 cross today, so it can't go up or can't go down. No. Once they get outside that territory, we can apply other technicals and say, look, path of least resistance is lower. Or, hey, you know what, we're getting to an interesting bottoming point. And we could talk about, trading it, playing calls and playing puts, but the challenge won't trade it, with that. It's, it is going, or the challenge is 100% dependent on those algorithm signals to come in. And I know I've gotten a little pushback on that. Hey, we've only had 3 trades here, and in just under 3 weeks. And yeah, that's a little lower pace than what I would like to see. But at the same time, let's face it. It's not like it's not like a lot of these stocks are on big trends. It's not like we've had an opportunity really to get into Visa this month, right? To where we've seen a signal come in to actually trade it. Yep, there's been 2-day bounces and things like that, and heck, even what we've played, everything has gotten time stopped out. There of it. Okay. Now J&J would be a bearish signal here today. It has the downside 3-7 crossover, and it's triggering bearish with everything except for the magnitude of the move is just way too strong to warrant an option trade right here. The implied volatility has skyrocketed. Buying put options right here is pretty much a gamble, not a trade, and so not. Yeah, the algorithm isn't gonna trigger there for us in that in that situation. Okay, so that's kind of some of the stuff that's going on here this morning in the market. This morning in the way some things are trading, we still see bonds trading on higher. But one of the more interesting things as well is the fact that the VIX, we could easily see the VIX go red here. We talked yesterday that while the market was green, the VIX was green, and that doesn't add up. That doesn't compute. You'll notice that today market's down. VIX not up all that much. It's only up 1%. And so to see a later day rally would not be a huge surprise given where that VIX is, and given the fact that there's a high dose of the selling concentrated here within the healthcare sector and within the energy sector. Here today, oil down again here today. Economic concerns. We saw, as I put in my note this morning, we saw China come out last night talk about rare earth minerals. They control an estimated 80% of the market around the world, and this is perhaps one of their stronger, arguing points or cards that they have to play in the trade war with the U.S. And each side, they have plenty of cards they could play. Right? There's still a lot of different ways that they could escalate things, but China continues to show signs of willingness to play this card with the rare earth, with the rare earth metals. It's still one of those where just not a great way here in the U.S. to get exposure to it. We talked about the REMF, which is a very high risk way to get exposure to it. And since we talked about it back here, it's up over 100% or something like that. And I would not be surprised to see it up another 100% going forward, as it's kind of the, one of the very few ways to get exposure. The REMX is, a little bit more of a ETF style and whatnot. There, you can actually trade options, but the spreads are pretty crazy there when it comes to it. And you'll also notice with oil down today. All right, what are airlines doing? Oh, airlines are down. Oh, okay, yeah. we talked about that yesterday. This kind of debunking some of that myth of, well, airlines they go up when oil goes down and vice versa. We're seeing and one day doesn't make it, but it does highlight some of that element here. So going to be a very interesting day in terms of how it plays out, how it kind of continues here today. We are coming up on the end of the month here. And, a lot of times end of the month, has a little bit more selling, a little bit more of a sell bias than a buy bias, but it's not strong enough to say, well, just sell into the end of the month and sell everything and you're good. But when we look at kind of where some of the, potential challenge positions are coming, potential with a Netflix, to the downside, potential with a Facebook to the upside, but potential, not triggers here just yet. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you later. Take care.